All right, we are live and here we go. Alrighty, so Adrian, who do we have on the show today? Let's just say, I'm just call it the show.
The show. So today we have the one and only Paige Oshiro, and she is a specialist with the reverse mortgage product.
Yeah,
that is her one thing, reverse mortgages.
yeah.
So we're excited to have her.
Yeah, we're excited to have it because we know that when people focus on things, they get really good at it, and that's what you said, Adrian. It's Paige's one thing. So Paige, local style. We sometimes in the mainland just get down to business, right? But we're in Hawaii. It's all about connecting and the aloha spirit and getting to know each other. So tell us about your story. So two things: your story of here in Hawaii, and then how you got into reverse mortgages.
Sure. So my story here in Hawaii, I was born and raised here, lived in Mililani for a little bit, and then moved to the Nu'uanu Liliha area where I've been since then. Really love it here, and I would love to spend the rest of my life in Hawaii serving this local community. I love the mountains and the beaches, and my family's all here. I love the people here. And yeah, it's a wonderful place to live, and I'd really love to give back because the people here have done so much for me, and I really love this place. And in terms of me and reverse mortgages, which I think was the second part of your question, and some of you have probably heard this before if you've listened to the Team Lally radio show, but I got into reverse mortgages. It's kind of like a family business because of my mother, Paige Oshiro. And she came from a high school educator background. She was a math teacher, and we got into the business because both of my grandparents, her parents, they suffered strokes and lost their independence. The reverse mortgage was a potential solution that could have helped them receive care in the home that they loved. But at the time, we thought it was a scam, so we turned away the reverse mortgage, or my mother turned away the reverse mortgage professional who had come to present the solution to her. And it was only after she sold the house to pay for my grandparents' care that she discovered, oh, we could have actually used the reverse mortgage to keep, my grandparents in the home that they loved. And of course, it's not for everybody, just like any tool, but for the right situations, the right people, it can be really life-changing. And so we come into the business from a very education-based perspective, and we have a lot of respect and empathy for people who are also skeptical, because that's where we were coming from. So we focus a lot on education and debunking those myths and clearing up misinformation and misconceptions so that people can make educated, informed decisions in retirement. And that's what we're all about.
Adrian, you had a question?
Oh, I was just going to say that's a really wonderful way, to get involved with the reverse mortgages. I mean, not so great for your grandparents, but you really have such a close personal connection to all of the things, all the potential of this product. Yeah. So I'm so glad that you guys took some lemons and you turned it into lemonade so that you can help other elderly people just get educated on what their options are.
Yeah, so let's start with the basics. Just explain. If I've got this, it's one of my favorite lines. It's from I think Denzel Washington. He used this line in the movie Philadelphia. He said, "Explain it to me like I'm an 11-year-old." So let's start with the basics. Even though some 11-year-olds are pretty sharp nowadays, maybe explain it to me like I'm a 5-year-old. What is a reverse mortgage?
Okay, so the reverse mortgage is just a special type of home loan for seniors who are 62 years old or better. There's also actually another type of reverse mortgage where the minimum age is 60, but I think we'll talk about that a little later in the show, the two types of reverse mortgages. The reverse mortgage is just a tool that allows kupuna homeowners to tap into some of the equity in their home or the value they've built up over time. And it allows them to actually spend that equity in retirement while they're living in their home. Because otherwise, one of the other common ways to use the value in your home or access that equity would be to sell the house, right? Then you would be able to take the equity out, but then you don't have a house anymore, right? So this is a tool for people who want to stay in the home and they want to use some of the value in their home to enrich their retirement. So people use it if they need a little extra cash or as an emergency fund. They want to fix up their kitchen. They want to go travel. People use it for a lot of different things. And it's basically using some of the equity in your home to fund your retirement.
So Paige, what is the main difference between this reverse mortgage strategy and just getting a home equity line of credits?
That's a very good question. We get that a lot. So with the reverse mortgage, unlike with a traditional mortgage or a traditional HELOC that you might get from your bank, the reverse mortgage does not require any monthly principal or interest payments. However, one very important thing to know is that seniors who have reverse mortgages, they still own their home. And because they still own their home, they have responsibilities. So while they're not required to make monthly payments on their reverse mortgage, they are required to pay their property taxes, their homeowner's insurance, to maintain the home in good condition and to continue to occupy the home as they always have. And those are their responsibilities as a borrower. But that's a big difference where they do not need to make a monthly payment on the reverse mortgage. And a second big difference is that with a regular mortgage or regular HELOC, there is a term, right? So you have on your mortgage, you have a term, probably 30 years, or if you have a HELOC, you have a draw period, and that's the time in which you can actually utilize that HELOC, right? But with the reverse mortgage, as long as the senior is still living in the home and keeping up with their responsibilities, and of course, assuming that they haven't drawn all the money out, right? Assuming there's still something in there, that line of credit will stay open for them to use. And the third big thing, I'm sorry, it's a little bit of a long response, but the third big difference is that with the reverse mortgage line of credit, it actually grows over time, which you won't find on a regular HELOC. And the growth rate is whatever the interest rate is on your loan balance. So if your loan balance is growing at 3%, then your reverse mortgage or your HECM line of credit would be growing at that interest rate plus 0.5%. So it would be growing at 3.5% in that hypothetical scenario. So those are three of the big differences.
And then Attilio, you were on mute. We cannot hear you now.
Oh man, I had a good question. I forgot what it was. No, I didn't forget what it was.
So sorry.
So we talked about the three main, what is the reverse mortgages? What are the three benefits? Let's get into I forgot who it. Yeah, I was talking with my friend Jacob with Home Pros, and he does photovoltaic, and he made a great statement. He says the challenge he has with talking about clients, and you can just fill in the blank with whatever product or service it is not necessarily informing them of what it is, but getting beyond what the misconceptions are of what it is. So let's address those right off the bat. You can number one, number two, number three, but what are the top misconceptions? You talked about it earlier. Let's do the old myth busters for reverse mortgages.
Ooh, exciting. Yeah. Yes. Okay, so we'll start. Let's see here. One of the biggest myths that we get a lot of the time is people saying, oh, I don't want to do a reverse mortgage because if I do it, then the bank is going to take away my house or they're going to own my house. That's a big one. And that is false. So with the reverse mortgage, just like with the regular mortgage, your lender will put a lien on your property, right? Because they're lending you money. So they put a lien since the home is the collateral, but you still stay on title to the home, just like with your regular mortgage. You still own the home, not the bank. And then, when the senior who has a reverse mortgage, when the time comes and they maybe they do pass away, then the home would go to their heirs. So if their home is in a trust, the home would go to the beneficiaries of the trust, just like normal. and then the loan needs to be repaid in full once that senior permanently leaves, right? So once the senior has passed away and the heirs, they inherit the home, then they can decide from that point how they would like to move forward. And we'll probably talk a little bit more about that later on in the show. A second myth that we see a lot of times is that the reverse mortgage is like, oh, it's free money. It's like a government benefit. It's free money. I never need to pay it back. But that's not true because it's a loan, right? It's a reverse mortgage. So just like any other loan, it does need to be repaid. It's just when you repay this loan and how you repay this loan are just very different from a traditional mortgage. So with your regular mortgage, you're paying principal and interest every single month, right? So by the end of your term, the balance should be zero. Whereas with the reverse mortgage, you're not required to make those monthly payments, right? So if you choose not to, that's okay. But there's going to be interest that's accruing on whatever you've used. And once you permanently leave your house, whether that's you pass away or you sell the house or you just move out, then at that time, the loan needs to be repaid in full at that time. So yes, it's a loan. It needs to get repaid. It's just when and how it needs to get repaid is different from a regular mortgage.
So so let's say that it gets passed on to the heirs. Mm-hmm. If they wanted to keep the house, they would just need to refinance it or pay cash to.
Yeah. So that's a great question. So if the heirs want to keep the home, then they have different options. So you're right, they could use their own cash, their own assets or whatnot to repay the loan balance, keep the home. Some people, especially if the seniors, they know that their kids might want to keep the house. Sometimes they have life insurance, right? And life insurance policy, and the heirs or the kids are the beneficiaries of that policy. So they might use the life insurance money to repay the reverse mortgage, keep the house. Other times, like you mentioned, if the kids have, assuming they have good income and credit and they meet all the other requirements, it might be possible for them to refinance the reverse mortgage loan balance into a traditional loan in their own names so that they can keep the house. So there's a lot of different ways you could go about it.
I think that addresses the big one that everybody gets super scared. Mom and dad, they're going to lose the house. If they do this, there's no way out of it. It's a one and done deal. There's no reversing the reverse mortgage.
Yeah. Oh, that actually brings up a good point, Attilio, reversing the reverse mortgage. So we have a lot of people ask us, oh, is it possible to refinance my reverse mortgage? And the answer is yes, but there's different requirements that need to be met, right? It depends on what your loan balance is at the time. It depends on the current rates. Like, would refinancing give you a significant financial benefit? And if it does give you a significant benefit, then yeah, you might be able to refinance to take more cash out or lower your rate. So that's another question that we get asked a lot. And yes, it could be possible to refinance your current reverse mortgage.
And what about purchasing with the reverse mortgage? That was something that that your mom had talked about, which I'd never heard of this before.
Yeah, thank you for bringing that up. That's the thing that not a lot of people know about is you can actually, our seniors can use the reverse mortgage to purchase a new primary residence. A lot of seniors, they don't want to get locked into another 30-year mortgage, or so they think, oh, I can't move, But a lot of the seniors we talk to, they actually want to move because they want to be closer to their kids or their grandkids. Or they want to go from maybe like a 3-story house to a 1-story house, to age in place. There's different reasons why seniors would want to right size. And with the reverse mortgage, they would be able to use that to purchase a new primary residence. And because it's the reverse mortgage, they wouldn't need to worry about required monthly principal and interest payments. They could make voluntary payments if they want to, but those payments wouldn't be required. So for some seniors, they really like that because it helps. It's good for the cash flow, right? They don't need to worry about making those monthly payments. And then it might also be better for quality of life if it allows them to go from a house that maybe wasn't going to be the best fit for the long term, and then they can move into something that will be a good fit for the long term.
And then some some comedians, I mean not comedians, but some grandparents, maybe they want to move away from the kids. No.
That's possible too.
But that reminds me of a funny thing that, you know, George Burns, he was a comedian. He played like God in the movie, and he lived, one of his things, he lived to 100, over 100 years old. And he says there's nothing like the feeling of family, especially when they live in another city. Anyway, but yeah, so the big myths there that we covered, and we learned some new things. You can purchase with a mortgage. You can refinance it. I didn't know that the credit line grows.
Yes, there is a growth rate on the line of credit, the reverse mortgage line of credit.
Yeah. You know, here's another one that people think, you know, we're seeing the home values going crazy right now, jumping up in values. And they might be thinking, because, you know, we're in the business, and what we know is like, makes sense to us because we're in the business. But when you're a layperson and this is not what you do for a living, it all could seem like, you know, rocket science. And so one of the things is that because the values are going up so high, that when we go to have to refinance grandma's home or mom's home, it's not going to be based on what it's worth at that time. It's just going to be based on what the loan value is, correct?
So with our current customers, and I'm sorry, I want to just make sure I'm understanding the question correctly.
Yeah, sure.
So if you have somebody who wants to refinance are you talking about refinancing a regular mortgage or a reverse mortgage today?
So mom and dads are in the reverse mortgage and they pass away. Kids are going to come in to refinance, and because they're not the original borrower, should the reverse mortgage company is going to give them an opportunity to do a refinance so they can keep the home. What determines the value of what determines that number of what they're going to have to refinance? Just the loan balance.
I see.
But,
I see.
But not because people are freaking out because of the home values are going up, like right now in this market.
Yeah. So the heirs would just be responsible for repaying the balance at the time that mom and dad pass away.
Gotcha. Yeah. Perfect. And then we got a question from Bob.
Yes. What are the interest rates on a reverse mortgage? Are they in alignment with the typical types of mortgage rates, or?
Well, let's let her answer.
Well, that's a great question. And like you mentioned earlier, I'm a reverse mortgage specialist, so I'm not going to speak on anything on the traditional side in terms of rates. But on the reverse side, the low interest rate environment has been very good for our seniors too, because it allows them to qualify for more funds, and it does lower the rates. So for the adjustable rate HECM, which is in our experience, it's been one of the more popular reverse mortgage options. That's the HECM is the FHA insured reverse mortgage. And the adjustable rate has been starting around, I think, between 2 to 2.5% to start. And depending on which adjustable rate product it is, there are caps to how high the interest can go. The most popular product that we've seen on our end has been the monthly adjustable rate HECM with a 5% cap. So that means if your interest rate starts at 2%, then the highest it can ever go would be 7%. And then to continue on Bob's question, there's other types of reverse mortgages also. So with the HECM, there's actually also fixed rate options. So I believe right now the lowest fixed rate would be 3.31%. I might need to double check on that. So Bob, if you want to go more in depth, you can feel free to email me or call me and we can go more in depth on that. But just know that there's fixed rate options available also. And like I mentioned earlier, there's actually a second type of reverse mortgage. So there's the government insured, which is the HECM. And there's also proprietary reverse mortgages, which are offered by private lenders. And the interest rates on those proprietary loans, they tend to be higher. So maybe 5 to 7%. But the plus of those proprietaries is that it actually lends a lot more money for high value homes. So if you have a kupuna and they have $1 million house, then that proprietary loan would give them more money than the HECM would.
So you sit down with your kupuna and show them all the different options and talk them through like what are their goals and priorities and which one would be the safest and best fit for each one.
Yeah, because there's no one size fits all in terms of reverse mortgage. So yeah, like you mentioned, it's really important. We sit down with our seniors, we discuss what their goals are. And sometimes we'll even tell them, based on what you are looking for in your retirement, this might actually not be the best fit for you. Maybe you should go look into, XYZ, because we want to make sure that our seniors are exploring all their options. And sometimes the reverse mortgage is a great fit and sometimes it's not. So, but through asking those questions and having those discussions, we can help them kind of navigate that process.
I want to talk about, I created a banner here. Senior protection is what I'm calling it. A lot of times the kids, we're what is it? Elder abuse, there's like a whole Netflix series on it, just about it. And explain to people the protection that's put in place on the classes they got to take.
Yeah, sure. So with the reverse mortgage, especially if you talk to somebody who maybe learned about the reverse mortgage 10 years ago, it's extremely different. There's a lot more safeguards and guidelines in place to protect the senior consumers. So one of those big measures that's in place now is everybody who's applying for a reverse mortgage, all those seniors, they have to go and do a counseling session, a reverse mortgage counseling session. And this is with a third-party counseling agency. So it's not any of the companies that are offering the reverse mortgage. It's a third party that's been verified by the U.S. Department of Housing and Urban Development. And that counselor will take them, and it's a phone appointment, and that counselor will take them through, again, how the reverse mortgage works, what the pros and cons are, what the senior's other options might be. And then at the end of that call, which normally lasts about an hour, the counselor will ask the senior, I think 5 to 10 questions, just to make sure that the senior understands how the reverse mortgage works. And that's a big change that has taken place. And let's see. We also do something called a financial assessment now, and that's basically a process where we look at the seniors' monthly expenses and their income, and it needs to meet a certain threshold just so that we can demonstrate that the reverse mortgage is a sustainable solution for the senior who's applying, because we wouldn't want it to be a Band-Aid fix and then the senior gets in financial, might get in trouble in a year or two. That's not good, right? So we want to make sure that the reverse mortgage, if they're pursuing it, that it's a sustainable solution and it's a long-term solution.
Is that free?
I'm sorry, the financial assessment?
Yeah, is it free?
Yeah. So if we have seniors who call us and they're inquiring to see, do I qualify and is this a good fit for me? Then we would ask them, some questions about their financial situation, and we'd be able to run the numbers to see, okay, do they meet those requirements? Would it be a good fit? And then another thing that I don't know if we have time, but I'll just point this out really quick. Some of our seniors, some of them don't have the best credit, right? Sometimes they have a couple late payments and they worry and they say, is it still possible for me to do reverse mortgage? And the answer is yes, it might still be possible. We look at their holistic financial picture. So even if you have somebody who maybe got rejected for a traditional refinance or a traditional HELOC, it's possible that they might still be able to do a reverse mortgage. So if somebody's in that situation, they can always inquire to see if a senior homeowner is in that situation, they can always inquire to see if the reverse mortgage could be a good fit.
Doesn't hurt to ask.
Yeah, that's excellent. That's excellent information, right? Because sometimes it's just, they lose a bill and then all of a sudden the credit score goes down. Yeah. So I love how the underwriters, they look at the entire picture. Right? How is it going to help them?
Yeah, I want to go worst case scenario. Suppose they have terrible credit. Is there still a possibility in that situation? Just a different product, or
when you say terrible credit, Attilio, how do you mean?
More than 90-day late. All the
like in the 500s.
Well, as defined from the traditional mortgage, that they're just not going to qualify.
Yeah, that's a really good question. I've actually worked with several seniors who are in that type of situation. And a lot of times it's because things were out of their control. Sometimes medical emergencies happen, just the unexpected happens, and then your credit might go down, right? So in those situations, it might still be possible to
Okay.
do a reverse mortgage, depends on the situation. What we do sometimes for if the senior either they have some late payments on their credit report, or maybe their income, their monthly income doesn't quite meet the required amount. What we sometimes do is something called a life expectancy set aside, which is where we take a portion of the reverse mortgage proceeds that they qualified for, and we set it on the side, and the senior's loan servicer will actually use those funds to pay the senior's property taxes and homeowners insurance on their behalf for a certain period of time. And that's just because if the senior has demonstrated that they might not be willing or able to make those payments, that's when the set aside might happen. And it's important because we don't want any seniors to get foreclosed on, right, with the reverse mortgage. And like we talked about earlier, one of the big responsibilities for seniors who have reverse mortgages is they have to stay current on their property taxes and their homeowners insurance.
Yeah.
So if they have, maybe spotty credit, then we do that set aside as a service to them. And it's not a bad thing. Some seniors actually, they choose, even if they have good credit, good income, they choose to have that set aside because it's convenient, right? The loan service will be paying
one less thing to worry about.
Yeah, exactly. So it's actually it's a really good thing. And some of our seniors just choose to do it because it's convenient.
And last one, because we're coming out of the COVID, the forbearances, foreclosure moratoriums, all of that stuff's coming to an end. Mm-hmm. What if somebody's facing foreclosure on their home, but they got the income, they got the age requirement, and they got tons of equity, but they just were not able to make the mortgage payment, which might, plus all the bills, which is more than their income, where if they do the reverse mortgage and they only got to do the property tax and insurance, they can stay. Can you help the seniors, the kapuna, in those situations?
Yeah, it definitely might be an option for seniors who are in that scenario. Again, it varies from it's a case by case basis, right? We look at the whole picture. Sure. So if a senior who is listening is in that situation, I would urge you to call me or call another reverse mortgage specialist and just explore this option. If they are in a foreclosure scenario, if the senior starts to pursue the reverse mortgage, that's actually a way to repay the loan, right? So I believe that the foreclosure proceedings have to halt if the senior is applying for a reverse mortgage.
Okay. Well, and then that, like you said, case by case basis. You know what? I know you recommend call someone else, and you, Adrian and I, we only recommend they call you. We've done the research. We trust you guys. We would not have you on the show or be recommending you all to our client database or other people.
Well, maybe
other
if somebody's watching in another state, can you guys help in other states, or are you just
probably point them in the right direction?
Hawaii?
That's a great question. So for me and my mother, we're both only licensed to originate loans in Hawaii. Okay. But we do know people across the mainland. We've networked at some national conferences, and we have connections in different states. So if anybody was curious, we might be able to recommend them to someone.
Okay.
But yeah.
All right. Well, just like anything that's fun, everything must come to an end. So any last question we should have asked that we haven't asked you that you wanted to cover before we wrap it up?
Let's see. Oh, I will make a comment on what you said. I really appreciate your folks' confidence and your support and encouragement. But the reason why I guess I said, call me, or if you're not comfortable calling me, call another specialist, is because there's many loan officers who are able to do reverse mortgages, but if they're not a specialist, that means they're not working with these scenarios day in and day out. And the guidelines for reverse mortgages and just the way that the loans are structured, it's incredibly different from traditional loans. So that's why we urge people to talk to a specialist, even if it's not us, to talk to a specialist who's very familiar with the guidelines and with the strategies, so that they can use that knowledge, right, to assist you in your situation. So that's why we recommend specialists.
For the mortgage bankers out there, loan officers, here's what I would tell you. If you're doing the forward mortgages, then you need to do right by your clients. And you know what? Serve your clients and refer them to Paige. So that's our little shout out to the lenders out there who have been listening. Well, that's it. Adrian, anything else?
No, just want to thank you, Paige, for coming on our Friday Live. It's nice
Thank you so much for having me.
A face with the voice. You've been on the radio show a couple times, and here we are on the Friday Live. So as always, excellent information.
Thank you
Thank you
so
so much
much.
for having me. It was a blast.
All right, so we're going to take ourselves out again with that fancy video. Here we go.
Great. Thank you guys so much. It was fun.